Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to this swing trading show. Today we're Monday, August 24th, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today we had a bloodbath at opening on the markets, but finally the situation is starting to get back up. We have a rebound on all indices. It was kind of normal though. It was something that we were expecting, especially on Friday though. This is one Friday, even if we're going down on Friday, we say that we actually are approaching a level where after the markets lost almost 600 points in 2 days, that eventually we're going to have a rebound. Today we had a massive sell-off at opening, and the reason why is continuing to be worries, fears concerning Chinese growth. We know that the Chinese regulators today, they say that they're going to go against the people who actually sold their shares, because they had some rules in place a couple of months earlier saying that they forbid any shareholder who has a 5% stake or more in a company or any officers from selling their shares. So some of them did that, and this is why we had a sell-off on the Chinese index, and this is why we also had a sell-off on the American indices such as NASDAQ, Dow Jones, and the SPY. But if we take a look at the situation here, we have resumed half of the points that we lost since this morning. So on all indices, NASDAQ, TSX, Dow Jones, SPY, we are now back at almost back at the zero line. So what was really important though is that at opening on marketgurus.tv, what we have advised to do is first to maximize your profit on your short positions, because we're expecting a rebound to happen. If we take a look at the situation here, I want to show you some stocks in our analyst shares portfolio where we actually did close totally our positions. We had positions on HXD, which was a bearish ETF. At opening, the ETF surged, so we took some profit around this area here. HVU, we actually decided to close that position totally as well. SPXU, another bearish ETF, we decided to close that position as well. Same thing too for SQQQ. And the reason why we have been more active in closing our bearish ETF is because if we take a look at the situation here, yes, we have been declining on all indices, but we also had a situation where, technically speaking, that will trigger a rebound. It's a first day of rebound today on the NASDAQ, first day of rebound as well too on the Dow Jones, which is rebounding after testing its upward trend. So definitely we're at a point where the rebound could continue. However, because it's the first day of rebound, what we advise our customers to do on marketgurus.tv is to actually, instead of going with some stocks, is to go with an ETF. And the reason why with an ETF is because the ETF gives you a wide range of exposure. For instance, if you take a look here at stocks, the big caps, I want to show you a list of mostly big caps. So take a big hit at opening, and finally right now they're having an intraday rebound. I'm talking of a stock like Dollarama, which went to $66, now it's back at 75. Alimentation Couche-Tard, which went at $48, now it's back at 55. So Apple, Facebook, Google, so all those stocks really have all rebounded pretty strongly and try to look at Home Depot, really JP Morgan Chase, look at how the stock surged, going from 51 to 62 in a couple of minutes from JP Morgan, MasterCard as well. So because we have all those stocks that are rebounding intraday, that are not in a situation where you could say that it's a solid bottom, because it's the first day of rebound, so we cannot say that this closing range or this trade here, this range, is going to be the confirmation of a bottom on those stocks. And this is why we continue to favor ETF, and this is one of the reasons why at opening on marketgurus.tv, what we have favored, we have actually recommended to open some position on that bullish ETF, which is UPRO. That has been recommended here. Since then, UPRO has been able to surge by more than 6%. So we decided to take some profit on UPRO. We still have the position left on UPRO, but if ever we lose all of today's gains on that ETF, well, we're not going to hold to that ETF overnight. But really at opening, the best alternative, the best strategy was to first cash in on your short positions or close all your bearish ETF, going gradually to open some positions, bullish positions, but favor bullish ETF instead of stocks, because on most stocks, none of them we can confirm really a confirmation of a bottom. I've shown you all the big caps here, and on none of them there's a clear solid bottom that says that it's a moment to buy those stocks. This is why ETF are a better alternative. So as I said, folks, the question bar is open. If ever you have any questions, feel free to ask them concerning a stock, particular strategy. It will be my pleasure to answer them. I know last week I made a chronicle concerning the gold sector. I was saying that it was a clear entry point on the gold sector. I think it was around this area here. We are around this area on gold. Right now, with all the fears that we're seeing, especially concerning China, I find it kind of weird that the appetite for gold is not as strong. Now, gold sector situation is still in a situation where we are, you should continue to hold on to your positions if you have already taken some profit on your positions on the gold sector. So really for the gold sector right now, it's a situation where most stocks that were leading the rally, I'm talking of a stock like Dator Gold or a stock like Agnico Eagle, right? Most of those stocks are continuing to maintain the upward trend. I think that right now the gold sector is potentially forming what could be called the beginning of a sideways formation. So that's a clearly up, well, it's still a downward triangle formation, but whenever we go above 145, 146, well, the situation changes totally. So really gold stocks right now, they're having a pause, and it is still a situation where you should continue to hold on to your gold positions. There's no risk in terms of is the sector going to go down. Really right now all eyes on the Fed, but with all the worries in China, I think really a lot of investors are not as willing to actually sell all their gold stocks, and I think it's going to weigh in really on the Fed decision on September to potentially not raise interest rate. So this is actually something that's I think could favor gold stocks, and this is why I think you should continue to hold on to your gold position so far, because so far they're resisting pretty okay. Of course, not all sectors are doing pretty well. We have a lot of stocks in the copper sector that took a hit. We had Freeport-McMoRan that started the breakdown today, but you see it rebounded. So that was clearly a false signal. And we had that throughout the day, though. A lot of today's breakdowns have actually rebounded strongly. So really, we're not in a situation, we're not in a mood where, not in a mood, sorry, mood is not the perfect word. We're not in a technical situation where we can actually recommend new short positions, because the potentiality or the potential of a rebound is present. The potential that it could continue so far is not as clear, because we cannot really at those levels say how far this rebound is going to go. This is why we're continuing to going gradually, and this is why we're favoring ETF first, and then if we could go actually above 16,750 on the Dow, or 4,800 on the Nasdaq, or 13,500 on the TSX, well then at those levels we'll feel a little bit more comfortable to recommend stocks instead of ETFs. So this is actually why we're recommending ETF first, a safest alternative, and then we'll get into with some more risky stocks. There's also Southern Copper that actually rebounded, resumed all the points that it lost. And in terms of the financial sector, I know this week is an important week for the financial sector on the Canadian side. We're starting to see right now a rebound. However, the sector, it's still at the low of its downward corridor. I think it's still a sector that you're gonna have to watch, folks, because we're gonna have several banks that will release their earnings. Of course, we're gonna have to see how the decline in oil, the tightening, well, no, not the fact that the cut interest rate for housing sector, will this have a positive impact on some banks? So for NTD, well, we at the low of the downward corridor, so we're actually stabilizing on TD, but I think really you should see how the earnings play out. On marketgurus.tv, we will publish the earnings every day. I know tomorrow BMO will release its earnings, but I know that throughout the week, in the summary of the week, we'll do actually a summary of all the earnings, the banks that beat analyst estimates and the ones that didn't. But definitely it's a sector that we're putting on our watch list throughout the week. On the US, there's no particular sector I'd like to highlight, because most sectors are almost doing the same thing, either pursuing their bearish cycle, or yeah, that's mostly it. That's what we have mostly. Only the gold sector is neutral in the US and also on the Canadian side, and it's really the sector where I think you should continue to hold on to the long positions that you've opened last week, when the sector have actually initiated a couple of bullish cycles.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So we have one questions here from Dom. From a technical view, when will energy stocks starts to go up? Well, one, you want to see from a technical view indeed, but you also have to take into account the fundamental view. And the fundamental view is that there's nothing that's bullish on energy sector since the end of this year, right? Because first of all, we have the Chinese economy that is slowing down. Brazilian economy is almost in recession. Russia is in recession. So really, countries that could have consumed more and more oil, well, they're not doing as much because their economy is contracting. So really demand is not enough. OPEC continues to keep the same level of production. So we have what's called an oil glut. So fundamentally speaking, too much supply, not enough demand. Now, technically speaking, what could bring the energy sector back up? It's the confirmation of what's called a bullish divergence. So look at the energy sector here on the graph. We have a clear downward trend in the energy sector. Now, one thing we look for to determine if there's a bullish divergence is with the histogram. So what needs to happen to confirm that we will have the beginning of a solid rebound on energy stocks is this bullish divergence, which means that if ever we continue to go up for the next 1, 2, 3 days, right? The histogram starts to be positive, and then let's say that we test this downward trend towards 180 and we go back down again, but we go back down and the histogram is actually more positive than this bottom here, that will be clearly a bullish divergence. So that will be the confirmation that really the next rebound is going to be more solid. But right now we're not in a situation yet. We have not even started a rebound that could allow us to see, okay, when will the bullish divergence be confirmed. So first what we need a more solid rebound that will bring the sector towards 180. The histogram will start to be towards positive territory, and then another fall. And when this fall will stop, so let's say we have a fall after reaching 180 that stopped towards 160 and the histogram is around there, that will be a bullish divergence, and at those levels I'll feel more comfortable to buy some stocks on the energy sector for a rebound. So this is actually what we're waiting for. So far it's not what we have, and fundamentally speaking there's more things that is negative among energy stocks than positive. So you also have to take that effect into account if you want to buy some energy stocks. Now, or one alternative you could do, as I said, is to go with some ETF. So instead of buying some energy stocks, which are more risky, I would say that if ever tomorrow the rebound could continue, well, to trade the energy sector on the Canadian side, there's HEU, right, that you could trade. Not as there has been a stock split on that ETF, so it's not the same thing here, but HEU will be an ETF that you could actually trade to benefit from a potential rebound if it continues on the energy sector. Now, as for oil, see that oil went almost lower than this downward corridor and finally rebounded, but it's still really, really weak, and there's still a risk that oil might go further down. Now, here, how can I reset the 10-to-1 merge for HEU on Trader Plus? Well, it's something that you cannot do, unfortunately, because of our supplier of data for Trader Plus. One thing I would advise you to do is to actually let the day pass by, and actually the trading range will correct. The merger will be done on Trader Plus automatically, but because of our supplier, we're constrained by that. There's no possibility for us to do that on Trader Plus. I think it's a pretty great idea that you bring. I've put this question to our developer of Trader Plus to see what he can do. But right now, with the current system that we have, we are unable to do that stock split on Trader Plus. In terms of the options, though, there's no options concerning that, because I think this is the way it's set up in terms of how we receive the data on Trader Plus. But you can still do it on Market Vision for a stock split. One thing that you could do, for instance, you go there to a stock, you put here fraction, you choose that, and you go for the day before. So right now we're at the 24th, so you go at the 21st, and you actually put the stock split. So either it's a 4-for-1 or 2-for-1, depending on the split on the particular stock or ETF. Now, as for the day trade of the day, is ANFY FI on New York. Look how the stock gave us several entry points. We also have several ETF too that you could actually favor, right? So, but that stock here really gave us several entry points. In terms of a list of some ETF, this is a list here of all the most active bullish ETF, followed by all the ones that are starting with an S are all some bearish ETF. So we recommended both, but as I said, we still believe that this rebound could either stop today or continue. But if it does continue, it's going to be all tomorrow that it will continue, because I don't think that today, after erasing all of today's loss, that we're going to have enough momentum to allow the markets to make a new high. But we need to see how tomorrow and the days after come by, and then if ever we have a pursuit of the rebound, we have a list here of some bullish ETF that you could favor at the benefit from the pursuit of a rebound on the markets. So that's it, folks. See you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.